If you still find it difficult to analyze a market and know when to enter a market or come out of it, then this video is for you. In this video, I'm going to show you a systematic and very easy way to analyze a market and get the best out of it. Before I continue, if this is your first time of seeing this channel, please like, subscribe and share, because this will help us to reach a lot of forex traders who are still struggling to be profitable in the forex market. By the way, my name is Kingsley. I have been trading forex for over 5 years and I have been tutoring a lot of students. And in this video, in a short period of time, I will show you everything how to use this and make money. So let's go. 7 best steps to find a trading opportunity in the market. And before we go into recharts, I would like to explain these steps so that it will be easier for us to use them and find opportunities straightforward. So first one is to identify the market structure, more especially in the high time frames, because here it shows you a clearer picture of what the market looks like. Then the second thing is to confirm what kind of state is the market. Is the market making a correction or is it retracing? Okay, I will show you in a small time how this looks like. And the next thing is to identify the zones of liquidity. This will help you to know where the market tends to go towards. And then the next thing is internal channels. Now, when you go down to 4 hours time frame, 1 hour time frame, you will discover other channels of the market. I will show you what this looks like in a short period of time. The next thing is to identify your support and resistance. Okay, and then place your trade and set your stop loss and take profit. So let's go into rechart and I will show you all this. Chart of Euro USD, as you can see from here, and we are going to use it for our analysis. All right, but before we start, we need to choose a part of this particular chart that we want to analyze and know what happened in that particular part and how we would have profited in such market. Let's say if we traded the market. Okay, so let me just choose a part of this particular market that we are going to analyze. Let's say this uptrend, okay, this bullish movement. Let me just quickly mark it. All right, from here to here. All right, so this is the part we are going to analyze. Then we are going to follow our 7 steps to analyze the market. Let's begin with higher time frame. So let's go to monthly time frame. So we want to find out what structure is this particular market, this particular currency pair. What structure is it in? So let me quickly kind of compress this, all right, and show you something. Okay, this is how the chart looks in monthly time frame. The market has been creating higher high, higher low, higher high, higher low, higher high, higher low. What does that tell us? It tells us that the market is in uptrend. The market is currently in uptrend. Okay, so this is the structure of the market currently from monthly time frame. Then the second thing is we want to know if the market is correcting or the market is retracing. Now, market has made this high, corrected, made this high, corrected, made this high, and has already corrected, as you can see, and was not able to take out this particular low, which tells us that the market is still in bullish direction, that is uptrend. So now that the market has made this correction, we're expecting the market to continue its movement upwards. So we have identified our 2 steps. First, know the structure of the market, the direction. Secondly, know if the market is retracing or correcting. Now the market has already corrected and is about to continue in the direction from monthly time frame. So let's go down to weekly time frame and see how weekly time frame looks like. Okay, now when we go down to weekly time frame in this form, let me just kind of do something like this. Okay. All right. So I want us to look at this particular range. This is the movement that touched this trend line before this upward movement in the direction of the market. Okay. This is the last movement that created the correction, okay, and how the market is about to continue in its trend. So I'm going to mark off this range, okay, with a horizontal line in this form. Okay, I would like to change this to dotted line. Then I mark off this point. Right? Then the next thing I'm going to do is to mark off all the resistance levels. Okay, I want to mark off all the resistance levels of this downtrend. Okay, I mark it off like this. I have to change this to line and also make it a bit tiny. Okay, so I would mark off this point, 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 and probably mark off this point, something like this. Okay, so now that we have marked all these points, let me explain the reason why you have to mark all these points. Okay. This is the downtrend, okay, that created this particular correction. Okay. Now that the market is about to continue in its trend, market will be bouncing up. Once market touch all this resistance level will turn to support level. Okay, let me repeat, all these resistance levels created here will turn to support levels when the market continues in this trend. That's why it is important to mark these levels. Then after identifying these levels, the next thing is to look at liquidity, because this point that we are going to analyze, we are just assuming that this point never existed, and we want to know how market would have reacted in this particular market movement, right? But this is what we would have seen in the chart. Okay, now looking at this, what can you see? You can see that the market is clearly, okay, the market was clearly ranging. Let me show you that, how the market has been ranging. Okay, look at this. Okay, I will change this to black color so that it will be easy to understand what I'm doing. Then this to this. Now, looking at this market range, okay, there are two things that you need to note here. First, whenever market is ranging, it is creating liquidity above it and liquidity below it. That is one thing about any ranging market or any form of range in the market. So now that you have seen that the market has created liquidity here and also created liquidity here, now the first liquidity that you have in mind that the market will take out is this down liquidity, because the market has made this correction and the market now wants to continue in the normal trend of the chart. Therefore, you expect the market to sweep out this particular liquidity. Okay. Now the market traded and sweep out this particular liquidity. So the next thing you expect is for the market to go up and sweep up the liquidity at the top. So maybe the concept of liquidity and everything is not, if it is not used to you, then you need to watch some of my previous videos to understand this particular concept. So what I mean by liquidity is just that here there are a lot of in this particular downside, there are a lot of buyers waiting to buy the market, and at this top there are a lot of sellers waiting to sell the market. So market will always take out buyers, okay, and move up, or take out the sellers and move down. So first, because the market is in uptrend, we expect the market to sweep out all the buyers, okay. Then because all the buyers have already set their stop loss somewhere here, so market will first of all take out their stop loss and move up, okay, something like that. Just go to my previous videos and you understand the concept of liquidity. So, but that is what happens. So after the market must have swept out this particular liquidity, so now we are here at this particular point. If you look closely, you see that this particular resistance has turned to support for the continuation of this trend. So you need to be very, very observant in this particular spot to know the reaction of the market and an opportunity for you to get into the market and take advantage of this particular movement. So we're going to go down to daily time frame to see what actually went on here. I'm going down to daily time frame. You can see that in this particular point it is not so clear, but we are going to go down to 4 hours time frame to confirm what actually went on here. Okay, you can see that market reacted a lot here before market finally continued in this trend. Okay, but we are going to go down to 4 hours time frame and see what actually happened, because when you are doing anything day trading, you need to analyze everything in 4 hours time frame. Okay, other people have different opinion about this, but I like using 4 hours time frame to know exactly what is going on in the market and how to scale in 1 hour time frame and 15 minutes time frame. So let's go down to 4 hours time frame. Now this is what 4 hours time frame looks like. Okay, now look at this pattern. Look at this, look at this, look at this, and look at this and that. These are opportunities you would have had to get into the market and make money from this particular trend. What do I mean by that? Let me draw a trend line. Now first, look at this. You remember the inner channel that I told you about? We always draw the inner channel in 4 hours time frame, 1 hour time frame, 15 minutes time frame. You can draw your inner channels. Okay, this is my inner channel. Okay, let me just put it this way. This is my inner channel for this trend. In 4 hour time frame, this is my inner channel. Okay, so what really happened here? How did you know that the market is about to change and we have to get in? Okay, we need to consider certain things. So first, from a weekly time frame, we have already confirmed, okay, from this particular resistance line, if you remember. this particular resistance line that has now turned to support zone, okay, that the market is already trading here and reacting a lot without taking it out. Okay, then look at this particular short break of structure. Okay, look at this particular short break of structure. Break of this structure, you can see that the market returned and retest this support zone. Okay, this is a resistance. Horizontal line from weekly time frame that has now turned to support zone. So after break of this structure, market returned to test this particular support zone and was rejected, okay, and pushed up again and couldn't return to this particular point. So if you look at this particular place, you will notice something. Okay, look at this. Let me just show you something very quick, because these are the little details you need to take into consideration when you trade. Look at this. This is a clear range. This is a clear range. Okay, what does this range do? This range created liquidity. Okay, there is liquidity line below here and there is liquidity line above here, and the market carefully sweep out this liquidity before the market made this bullish movement. Okay, now look at this. You remember I told you that these lines, these resistance lines, will later turn into support zones for the market to push up. Now what happened? After this particular movement, market returned and respected this particular zone. You see, then you enter again, made this movement, return again, respected this particular zone again, the third zone. You see that? Then market made move again, was respecting this particular trend lines, then until this particular trend line was broken and retested and made this particular movement. So what am I trying to say? These are opportunities you have gotten. They being that we traded this particular movement, we would have gotten opportunity here, another opportunity here, then another opportunity here, another opportunity here, another opportunity here, before the market break the structure, then retested it, then changed. These are how to analyze the market, okay, and know when to enter the market. Now, stop loss and take profit. Okay, now when we enter the market here, we set our stop loss just below the last low. Okay, then our take profit above the next resistance level. Okay, then it's returned. Then we place our stop loss again. If we enter the market here, place our stop loss somewhere here. Okay, then our next take profit above the next resistance level. Then we will have entered another trade here. Okay, then this movement. Then place, if we enter a trade here, you place your stop loss just below this one. Okay, and your take profit in the next resistance level. Okay, the market returned again. You enter at this point, place your stop loss below this particular zone, and then take your profit at the next resistance level. So this is how you trade the market and you make money from the market. So in our next lesson, I will show you how you can scale down to the 1 hour time frame, 15 minutes time frame, and know the exact time depending on the session you are trading, the Asia session, London session, or New York session, the exact time to enter the market and the exact time to exit the market. So stay tuned and you will enjoy all of our videos.
and your trading life will change in a big way.
So, from the chart that I just showed you now and what we just did right now, you can see that with these 7 steps, you can easily know the direction of the market, you can easily know what you are doing in the market, and you can easily know when to enter the market, where to set your stop loss, your take profit, and everything. So I want you to stay tuned. In the next video, as I said earlier, I will show you everything on how to enter the market in a lower time frame, like 15 minutes and 5 minutes as case may be. So if you find this video very helpful, please like, share, and subscribe to this channel in order to reach other forex traders who may be struggling on how to identify structure and how to become profitable in the forex market. So see you in the next video and remain profitable.